Hi, my name is Ron Fawley. I'm an architect, property developer, author, and now mentor. The coronavirus is impacting each and every one of us worldwide. So how does it affect the real estate industry? And what does the future hold for those who are investors and developers? Like other industries, real estate has been severely impacted by COVID-19. It would be irresponsible for any of us to speculate on the real impact of COVID-19. With the supply chain interrupted, builders and developers are further affected by more and more workers staying at home. Business shutdowns, quarantines and curfews. Vast numbers of layoffs will lead to further contraction in consumer spending, starting a downward spiral of economic activity. The impact on real estate will differ by sector and market, and the extent of the impact will depend upon the extent of the economic shutdown. The areas of real estate that has been hit the hardest so far are facilities catering for tourism, such as hotels, restaurants, bars, and other entertainment. It is closely followed by retail and housing. With China's factories and business now restarting and the Australian government's stimulus packages, there is cause for optimism. It will hopefully return to regular economic activity and a robust real estate market. The question is, how long will it take to full economic recovery? Several economists are predicting a recession, and that is 2 quarters of negative growth. Given this time frame, what should real estate investors and developers be doing? So let us look at the economic impact. There is enough media hype telling the public that we are facing a worldwide recession. However, let us summarize these and put matters into perspective. Let us firstly look at the impact upon the world economy. As COVID-19 looms large, it is too early to predict the effect it will have on the global economy, but let us look at the following factors. When SARS broke out 17 years ago, China was not an economic force. Today, she is the world's second largest economy, contributing approximately 1/3 of global growth. Countries like Australia depend on China for both Chinese products, such as building materials, and Australian exports to China, such as agricultural and mining products. With constant media transmission of the coronavirus and fear-induced behavioral changes in consumers, travelers, and businesses, COVID-19 may cause a significant reduction in consumption and export of services. Due to government containment measures, normal business operations will be significantly affected. There will be a large percentage of workers who will get sick, become scared to go to work, or cannot return to work. The aviation and tourism industries has already been hit very hard. If the COVID-19 lasts more than a year, it could lead to widespread business shutdowns, increased unemployment, and a further decline of consumer demand, which may throw the world into a global recession. Let us now look at the impact on the Australian economy. As mentioned earlier, Australia's economy is dependent on China, and a COVID-19 driven slowdown could mean billions in lost revenue. There's going to be a significant impact on tourism. It is not just the numbers of tourists, but it's the amount they spend on shopping, hotels, and tour packages. The travel industry has already been affected by travel booking offices closing, and the number of domestic and international flights significantly reduced. The education sector is a $34 billion industry. Revenue from overseas students is Australia's second biggest export behind iron ore. It is crucial how exposed Australia is if students cannot leave Asia to start their courses. The Australian mining sector may suffer as demand from China wanes. This could only be in the short term, as China's economy will most likely benefit from their government stimulus measures. Australian exports to China make up 38%, and Australian supplies to China's customers may find reduced demand for their goods and services. The seafood industry has been left devastated after China's ban of live seafood trade. While the above highlights key industries, there's still the flow-on effect. Support services to these industries will be severely impacted as well. Let us look at the impact on real estate. The impact of economic disruption in real estate varies and is going to continue to fluctuate from one state to another. Let us firstly look at the impact on the residential sector. Home builders are not only experiencing a pullback on sales from home buyers who are in isolation through lockdowns, but also the supply of materials usually imported from China. The housing rental market is dealing with tenants who have lost their jobs and are unable to meet their regular rent commitments. Many tenants will ask for leniency, and landlords looking at retention will give some relief in the short term. It will put a downward pressure on rents in the next few months, and landlords will be seeking temporary relief from lenders. First-time buyers earn an hourly wage and have little savings as a deposit. This group are likely to be the hardest hit by closures, reduced hours and short-term layoffs. This segment of the housing market will be greatly affected in the coming months. Second-home buyers are less likely to experience the disruption. These are professionals who trade up to a bigger or more expensive home. They generally have stable salary jobs and can work from home during this crisis. However, some of this group will be concerned about the overall impacts and will delay in deciding to move. Luxury home buyers think in terms of wealth and not income when deciding to buy a new property. They are financially secure, but are most likely affected by the stock market crash. It will affect their financial status and decision in buying a new property. Investors, both local and international, will be playing a cautious game by sitting on the fence and seeing what unfolds after the pandemic. Those investors who use negative gearing to invest will be concerned with their job. In contrast, Chinese investors will be restricted by the Chinese government's foreign investment policy. The impact on commercial real estate. The impacts on the retail sector are evident in the short term. Restaurants and stores can only generate a fraction of their regular income. In the longer term, it is likely that after the virus, the retail sector will bounce back. The key, though, is how long social distancing is in effect. In the office sector, most office space is empty under social distancing and lockdowns. The long-term question is whether the work-from-home concept will remain to some degree. Some workers will use this to convince their employers that they can be efficient and productive working online. It could lead to an increase in office space vacancy rates. Industrial and warehouse space is feeling short-term impacts from interruptions in the shipping supply chain. However, the long-term effect on this sector could be optimistic, as this experience encourages more online shopping, requiring additional warehouse space. Hospitality real estate is experiencing the most immediate impact. Hotels will probably not be able to recover lost revenue, and planned developments in this sector will be put on hold. Airbnb properties will be affected both in the short and long term. Future travellers will be concerned with the cleanliness of privately owned homes. The student housing sector will be severely affected unless the travel bans from China and other Asian countries are lifted. With many learning institutions finding ways to provide education online, there will be a drop in demand for local student accommodation. Is there hope on the horizon? Despite the negativity around Covid-19 and its impacts, the potential of economic rebound in the immediate aftermath should not be overlooked. It is not at all gloom and doom. In 2003, at the end of the SARS epidemic, it was followed by a rapid and robust economic growth in Asia. However, the speed and strength of the economic revival will depend on how long COVID-19 lasts and how much damage it does to the world economy. The experience with SARS suggests that when the travel ban is lifted, the flights from China to Australia will recommence. Tourism is likely to recover quickly and strongly. A global economy has not only facilitated the spread of coronavirus, but also intensifies the negative economic impact. These impacts will create protectionism and isolationism, leading to a local supply chain production. It will therefore be good for local economies. Last month, the Reserve Bank lowered interest rates to 0.25%. It is expected that these rates are going to remain low for the next 3 years, which suggests that it will take at least that long to get unemployment to an acceptable level. The Australian government has already started implementing a raft of stimulus packages. Some include supporting business investment, providing cash flow assistance to help small and medium-sized business to remain open and keep their employees in their jobs. Australia has a robust financial system which is well placed to provide the needed support to businesses and households. The banks have also been given $90 billion lifeline to lend money and stimulate the economy at very cheap interest rates. What lies ahead for real estate? The optimistic scenario is that once the virus is contained and immunity starts to take hold in the population, the real estate market should begin seeing some normality. Historically, residential property has performed relatively well in times of adverse economic shocks. In 1987, during the Black Monday stock market crash, where the ASX share market dropped 23% in value in a single day, but housing values were unaffected. Values instead went up a year later as financial deregulation drove up asset prices. Many Australians will face difficulty paying their mortgage or rent. Currently, the government is looking at ways of assisting tenants and landlords. Some banks are allowing mortgage relief, such as freezing mortgage repayments for 6 months, offering new low fixed rate home loans or refinancing. Australian interest rates are already at record lows. They could be cut further by the Reserve Bank if economic growth in Australia slows. Lower interest rates could further increase property demand. At some point, there will be a build-up of pent-up demand. People who are in lockdown will go out and buy new furniture, get their home renovated, or look to purchase another property. Australia does not have only one property market. The luxury end of the property market will be the hardest hit after the stock market crash. In blue-collar worker suburbs, homes are likely to suffer considerable price drops as local workers cannot work remotely and where there is a higher level of casual employment. However, well-located homes in established middle-income suburbs are likely to hold their values better. The Australian dollar is low, which means Australian properties, both residential and commercial, are now more affordable and accessible to overseas investors. Let us now look at the 3 essential strategies that could be undertaken during the lockdown period and a little beyond. Should we have a short, sharp recession followed by a rebound, the real estate market should hopefully pick up in the third quarter of 2020. So what do real estate investors and developers do over this period of uncertainty? Here are 3 strategies that can be implemented. Number 1, spend time looking for opportunities. 2, look for markets for potential growth. And 3, improve your knowledge and skills. Number 1, spend time looking for opportunities. As happened in the past economic crashes, real estate investors with a long-term view will find opportunities to pick up assets at distressed prices. When values are low, astute investors buy income-producing buildings and developers purchase land for development. It means that now is the time to get prepared to take advantage of the opportunities that the market will offer. Think long-term. One of the significant lessons I've learned from previous downturns is the importance of taking a long-term view, as property fundamentals always drive our markets. These fundamentals include strong demographics, supply and demand, affordability, availability of finance, and local economic trends. For those who can buy now, it is best time to start looking for opportunities, especially with record low interest rates. Have access to funds. To take advantage of an opportunity when you find one, you need to have access to available funds. If you're using your own capital or private money, make sure there is a capacity to purchase a few properties when the time is right. If you don't have access to banks or lenders, now is the time to start talking to them. Let them know of your financial status and your long-term intentions, and see if you can secure a credit line or pre-approval of how much you can borrow. Speak to estate agents. Estate agents have their finger on the pulse when excellent opportunities appear, as they have access to multi-listings and speak to other agents as well. It is a good idea to connect with a few local agents in the suburb of your interest and make them aware of your intentions. Another approach is to contract a buyer's agent who will individually work for you and look for the type of opportunities that suit you. Find opportunities online. If you are in home isolation, you can still find opportunities by accessing online real estate websites. There are some of the better known sites such as realestate.com and domain.com.au. Available as well are new generation tools as search engines that can present results in a graphical format. These include Trovit, Mitula, and Astoria, which are free search engines that compete with a paid membership such as Real Estate Investor. Number 2, look for markets with potential growth. With the advent of Covid-19, there will be demand for specific facilities that investors and developers can take advantage of. In Australia, there are several micro markets. For example, the market in regional Australia differs from capital cities, and each state has its own economic drivers. There will be a strong dependence on the economic makeup of individual cities and states, which will be affected by COVID-19. Therefore, during this lockdown period, it will be wise to research the demand for specific real estate opportunities in your area. Below are some areas where I see a growing market during and post the virus. Healthcare. With the growing concern of health and well-being during this crisis, there is already pressure on both public and private hospitals. Also, with the combination of an increasing aging population and continuous growth in technology is driving the development of aged care centres, hospitals, medical centres, and other healthcare facilities. Government is continually pressured to update and improve their facilities as well as expand their service offerings. With the many different priorities, healthcare administrators are responsible for this juggling, therefore creating opportunities for developers. Number 3, improve your knowledge and skills. Now is the best time to learn a new skill or improve on one while you're in lockdown. You can enhance your knowledge and expertise in real estate investment and development through online sources such as books and courses. Whether you are a novice or a seasoned expert, there are several online resources available. To improve your success in real estate, you need to develop your skills and knowledge continually. Not everybody knows everything, and we will need further training in our field of interest. The internet is your closest friend. It provides you with search engines where you can find a wide variety of books through Amazon, free videos on YouTube, and of course online courses. Ensure that you only select high quality resources that will provide you with sound learning. However, it is essential to remember that online learning requires self-discipline, time management skills, determination, and self-motivation. Online learning is not the traditional face-to-face platform with organized timetable. So if you're keen to improve your knowledge and want to make a success in real estate industry, investigate the following. Read books and articles. One of the best ways to improve knowledge and skills is to read. The more you read, the more you gain knowledge and skills. Read books and articles as much as you can. Reading online newspapers is another best way to improve learning and keep up to date with the real estate market. Real estate is a broad subject, and there are many areas one must cover to hone your skills before you can call yourself an expert. There's a wide variety of asset classes, from residential to commercial, and then there is finance and how to lead a development team. One book does not cover all that you can learn in a short space of time. As an author, I have written several books on real estate development and will be launching a series that covers various asset classes. You can also find books on Amazon.com, local bookstores, and of course visit my website, ronforley.com. Take an online course. Online courses are a great way to learn unique skills that will set you apart from other real estate investors or developers. One of the significant advantages of online training is the art of knowledge transfer through the internet from experts anywhere in the world. You may live in Australia, but there are expert educators in America. These courses are provided in the form of video tutorials, PDF or Word documents as training modules. Some online courses offer you direct access to your teacher, where you can have a direct chat or through a forum with other students. Another advantage with an online course is that you can learn at your own pace and in your own time, as there are no set times for classes. Find a mentor. Bill Gates has Warren Buffett and Richard Branson had Sir Freddie Laker as their mentors. Having a mentor is an excellent way of learning from people with real life experiences and not just theory. Mentors show a passion for their work and enjoy helping others to perform their job more efficiently and professionally. They can give you a career advice and assist you in networking. They help to build your character, increase self-awareness, teach you focus on your goals, challenge you, and help to maximize your potential. So how do you find a mentor in the field of real estate? There are not many out there, and it is for this reason I started the mentorship courses through my company, AYR International. My team and I can assist you in improving your knowledge and skills. You will find online courses that will teach principles and strategies in real estate investment and development, which is universal and are applicable no matter where you are in the world. Conclusion. Increasing population. It has been estimated that Australia's population will grow by 24% to over 31 million people by the year 2034, and more than 3/4 of this will be focused on the country's big four cities. It means that Australia will need more buildings and facilities, which spells a great future for real estate investors and developers. Be armed with knowledge. So spend your time wisely, as you now have the time to hone your skills. Be armed with knowledge to take advantage of opportunities when the market improves after COVID-19 has passed. If you are interested in taking a course or mentorship, visit awirinternational.com, or if you like to read some books or articles, visit ronforley.com. Thank you for listening, and all the best for your future.